Well, hello and welcome to India Business Hour. I'm Ashmit Kumar, and here are the headlines we're tracking this evening. Stock markets decline across the world after the US Fed signals plan to slow rate cuts in 2025. Nifty declines over 1%. Sensex drops below 80,000. The rupee sinks to a historic low of 85 against the US dollar. All Asian currencies weaken after a sharp rally in the greenback. Outstanding liabilities of state governments across India are declining, but they are still above pre-pandemic levels, says the RBI. Warns against loan waivers and SOPs like free electricity and allowances to unemployed youth and women. Also cautions against too many central government schemes, which reduce the flexibility of state governments to spend. IPO frenzy continues on the Lal Street. 5 new IPOs open for subscription, aim to raise over 2,900 crores among them. 15 companies have already cumulatively raised nearly 25,000 crore rupees so far in December, a record-breaking month for IPOs. Walmart-owned Flipkart gets ready to launch an IPO in the next 12 to 18 months. Sources say company's board has approved change of domicile from Singapore to India to avoid additional regulatory scrutiny. Accenture reports a 9% quarterly revenue growth, beating estimates, raises growth guidance for the full year from 3 to 6% range earlier to 4 to 7%. GST Council likely to discuss the possibility of bringing aviation fuel under its ambit. Sources say the GST Secretariat believes bringing ATF under GST will reduce cascading of taxes. The Council will meet on the 21st of December in Jaisalmer. After Britannia, Parle Products bites the bullet as shrinkflation makes its way back into FMCG. Decides to hike prices by minimum 5% across the board to cut grammage on entry-level packs by 5 to 10%. High drama outside Parliament as Congress and BJP MPs accuse each other of resorting to violence. 2 BJP MPs taken to the hospital and Parliament was adjourned for the day following the chaos. Helicopters and divers searched the waters off the coast of Mumbai for survivors after 13 people were killed in a freak boat accident. Mumbai police register a case after a naval speedboat collides with a ferry carrying over 100 people from the Gateway of India to Elephanta Caves. With elections looming, Delhi government rolls out a monthly stipend for women above the age of 18. A deep dive into targeted welfare schemes across several states and its impact on the electorate is coming up. Well, we'll get you all of that and much more in just a bit. But first, the Federal Reserve signaling caution on rate cuts and its impact on global markets is our top focus this Thursday evening. Markets across the world saw red after the US Federal Reserve signaled fewer rate cuts going forward in 2025, even as it delivered a 25 basis point rate reduction on expected lines. Now, responding to questions at the press conference, Fed Chair Jerome Powell said that the central bank would be looking for progress on US inflation and moving slower on rate cuts.
You know, we've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation, and that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
Well, a cautionary rate cut outlook from the Fed prompted a sell-off on Wall Street across the Atlantic. Top European stock markets tumbled as well. Bank of England left rates unchanged after inflation in the United Kingdom rose to an 8-month high in November. The status quo rate decision was on expected lines. Asian markets, meanwhile, weren't spared from the Fed jolt either. The Shanghai Composite Index, the South Korean Kospi, and the Japanese Nikkei ended the day with losses. Back home, the Lal Street felt the impact as well of the Fed jolt. Both the Nifty and the Sensex ended in the red. All sectoral indices, with the exception of Nifty Pharma, ended the day with losses. The Indian rupee breached the 85 per dollar mark for the first time. This after the dollar index strengthened following hawkish outlook from the US Fed. Indian bond prices, meanwhile, also fell and so did other Asian currencies. Lata Venkatesh is joining us now with more details. Lata, a secular movement across all markets, the jolt being felt across Asia, across India as well. What else are you picking up?
Rupee should have crossed the 85 mark even earlier, considering the amount of selling that's happened in the equity market and the dollars that have been taken out of the country. But the Reserve Bank was resisting it. It normally doesn't resist when it is a global trend. And that's what happened with the Fed sounding more hawkish than what the market expected. Market was expecting that the number of cuts will go down from 4 to 2, but they were not expecting the Fed to say that. They were expecting the Fed to say 3 for 2025, but the Fed almost coming in line with the market has kind of shocked, and you saw the dollar index go to 108 plus, and that led to about 15 to 80 basis point depreciation in all currencies. And the rupee was still the outperformer with about 15, 16 basis point cut. It crossed the 85 mark and there was some stability around that 85.07 mark. It appears that most of the long dollar positions got squared off at that point, and further demand for dollars were not there. Also, the fact that probably the trade deficit in November may not be as ugly as was earlier presented because of a possible double counting of gold was also something that worked a little bit in favor of the rupee and against too much of dollar buying. But the trend for the future, for the next quarter, for the next year, quite clearly is still downhill for the dollar. The expectation is that you must see the dollar go at least to 85.50 by the time the fiscal year ends. By then, one will know what are exactly the Trump tariffs. And for the end of the year, 2027, the emerging number is 87, which is about a 2.5% depreciation. The argument being that China in 2018, to counter the US tariffs, had depreciated its currency by 13%. And at that time, there was nothing like 60% tariffs. So now if it is anything as bad as even 20%, you should expect the yuan renminbi to go to 8 to the dollar. And that would mean a 2.5% depreciation at least for the rupee. So 87 is the new number that the street is looking at.
Right, Lata, thanks a lot for that. Now, the Reserve Bank of India has released the study on the budgets of state governments. The central bank has said that liabilities of state governments are declining, but they remain above pre-pandemic levels. The RBI has also cautioned state governments against loan waivers and schemes to provide free electricity and free transport and allowances to unemployed youth and women. The central bank argues that such spending could crowd out resources available to build critical infrastructure. It also warned about the weak health of state-owned power distribution companies. The RBI also had a word of caution for the union government. The central bank said that too many centrally sponsored schemes reduce the flexibility of state governments to spend, and it dilutes the spirit of cooperative fiscal federalism.
States have to not only find resources for matching the contributions for the centrally sponsored schemes, they also have to provide for the gap between what is the total and true cost of the centrally sponsored schemes and what the central government provides by way of unitary or unit cost-based kind of reimbursement to them. Increasingly, central government is putting more and more of the share of the centrally sponsored schemes. It ranges now up to 40% for many schemes.
Well, monthly stipend schemes targeting women voters are reaping rich dividends for political parties. We take a closer look at schemes in multiple states a little later on India Business Hour. Well, moving ahead, the union government will undertake a review of the gold import data for the month of November. Gold imports surged a whooping 331% to 173 tons in November. This pushed India's trade deficit to a record high of $37 billion. This was more than 3 times higher compared to what was imported in the previous year. The Commerce Ministry has begun a detailed examination of the data amidst indications of double counting. Also, Chunchunwala family-backed healthcare services provider Inventures Knowledge Solutions made a strong debut on the exchanges. Its shares listed at a premium of nearly 43% to its IPO price of 1,329 rupees. The company's issue was subscribed 53 times, with qualified institutional buyers leading the subscription. And speaking of IPOs, 5 main board companies kicked off their journey to the Lal Street today. They are aiming to raise a total of nearly 2,900 crore rupees. DAM Capital Advisors is eyeing 840 crore rupees via a complete offer for sale. Engineering and construction company Transrail Lighting is looking to raise 839 crore rupees. Their IPO is a mix of fresh issue and offer for sale. The other three companies are wastewater treatment solutions provider Concord Enviro Systems, Gujarat-based Mamta Machinery, and Mumbai-based Sanathan Textiles. And meanwhile, IT giant Accenture reported a strong set of earnings for the first quarter. Its revenue stood at over $17 billion, beating the Wall Street expectations on the back of growing demand for its services. The company raised its full-year guidance to be in range of 4% to 7% in local currency. And back home, Walmart-owned Flipkart's board has approved the firm's change of domicile from Singapore to India. The move to reverse flip comes at a time when Flipkart is readying itself for an IPO tentatively in the next 12 to 18 months. Rachna Dhanrajani is joining us now with more details. Rachna, what has exactly prompted this change of domicile, Singapore to India?
India's e-commerce behemoth Flipkart is making a strategic shift to go public. CNBC TV18 has exclusively learned from sources that the company's board has now approved relocating its domicile from Singapore to India, a crucial move to facilitate its much-anticipated IPO expected within the next 12 to 18 months, which means it could get launched by the end of FY25 or early Q1 FY26. The decision is not just about location, it's about strategy. By shifting to India, Flipkart avoids stringent FEMA and FDI regulations that foreign-controlled companies face here. This relocation will simplify compliance, streamline governance, and ease tax complexities, paving the way for a smoother IPO process. If all the needed approvals come through, this IPO could be the largest one yet. In 2024, we saw Hyundai emerge as the largest that valued the company at about $19 billion. But with Flipkart's IPO going ahead, it could be historic, as Flipkart was last valued at about $36 billion this year. Backed by Walmart, which owns an 85% stake after investing $3.5 billion in the company, Flipkart recently raised close to $1 billion in 2024 from investors like Google and other marquee names. Yet, it hasn't been all smooth sailing. In FY24, Flipkart reported a loss of about 2,358 crore rupees on revenues of 17,907 crore. We reached out to Flipkart seeking a comment on board's approval on change of domicile, but the company, without denying, has refused to comment at the moment. But we will definitely be watching out for more.
Right, Rachna, thanks a lot for that update. Now, JSW Infrastructure has announced a 30,000 crore rupee capital expenditure plan for the period FY25 to FY30. The investment aims to increase JSW Infra's cargo handling capacity to 400 million tons per annum by FY30. The expansion strategy includes brownfield projects at existing ports as well as greenfield developments. To the aviation space now, SpiceJet has reached a settlement with a lessor called Genesis to resolve a $16 million dispute. SpiceJet will pay Genesis $6 million. Genesis will also acquire SpiceJet shares worth $4 million at 100 rupees per share. This is a 78% premium to the previous closing price. SpiceJet chairperson Ajay Singh said that this agreement will significantly reduce the airline's liabilities. More from the aviation space. Air India has placed an order for 34 trainer aircraft for the upcoming flying training organization in Maharashtra's Amravati. The FTO, set to be South Asia's largest, is expected to start training cadet pilots by the second half of 2025, post the regulatory approvals. Air India's order includes 31 single-engined aircraft from Piper Aircraft in the US and 3 twin-engined aircraft from Diamond Aircraft in Austria. And India's top airlines, Indigo and Air India, say that they will increase duty and rest period for pilots in a phased manner beginning June of 2025. Remember, Delhi High Court had asked DGCA to consider the implementation by early 2025. The aviation regulator had revised norms to be implemented by June of 2024, but had to put it on hold after the airline operators had opposed. Madhya Mujawar joining us now with more details. Madhya.
Exactly. And before I talk about the latest developments, I'll quickly give some context to our viewers. In April 2019, when aviation regulator DGCA had come up with civil aviation rules on duty and rest period, which pilot associations had challenged in the Delhi High Court. They wanted more rest period to avoid getting fatigued. So in January this year, The aviation regulator DGCA came up with revised norms and set 1st June 2024 as the implementation date. But airlines resisted, saying this will jeopardize their operations. So the DGCA put the rules on hold without any date. Then in April, the regulator asked airlines to give an indicative timeline for implementation. So early this month, Delhi High Court asked DGCA to consider the implementation date by early 2025. And then the DGCA met pilot unions and airlines this week. So here's what has transpired in the matter now. Pilots are urging that new norms be implemented by February next year. Now, CNBC TV18 learns from sources that both Indigo and Air India have refused. They've told DGCA that they will do partial implementation by June 2025. SpiceJet is seeking implementation by March 2026. On weekly rest for pilots, which is the contentious issue, DGCA rules require 48 hours of rest. Now, Indigo is willing to increase from the current 36 hours to 40 hours. The airline told DGCA it will assess the impact on operations it has and then think about increasing the rest period further. Air India said it will increase rest period from 36 hours to 48 hours from June 2025. Indigo has agreed on 2 landings per night. Air India said it will do that in the second phase. The new rules define night from 12 a.m. to 6 a.m. Indigo is willing to implement this rule starting June 2025, but Air India said it can increase night definition to 6 a.m. in the second phase, which will be in 2026. Now, both Indigo and Air India warned that increase in rest period could lead to flight cancellations and also shortage of pilots, requiring the operators to recruit more pilots. So they have submitted that their comfortable plan to the DGCA. Whether the aviation regulator will allow them to go ahead with this is something we need to watch for.
Right, Madhya, thanks a lot for that. Now, the GST Council is all set to meet on Saturday. We learned from sources that the Council is likely to discuss the possibility of bringing aviation turbine fuel under the GST regime. Sources say that the GST Secretariat is of the view that value-added tax on ATF includes central excise duty and results in cascading of taxes. Most inputs for ATF production are under GST, but ATF is not. Bringing ATF under the GST ambit would enable manufacturers to claim input tax credit on GST for inputs. And India's antitrust regulator has raided offices of alcohol giant AB InBev, which sells popular beer brands like Budweiser and Hoegaarden. Reports suggest that the move came amidst an investigation into allegations of price collusion with retailers in a southern state. The raids took place in Hyderabad and targeted retailers in Telangana. Now, according to the CCI, government-licensed retailers of liquor in certain areas in Telangana appear to have entered into arrangements among themselves to sell only the products of InBev and exclude products of competitors such as United Breweries, Carlsberg and Bira. And coming up, high drama outside Parliament as Congress and BJP MPs accuse each other of resorting to violence. Details in just a bit. And you can also catch all CNBC TV 18's news and updates on Facebook, X, Threads, Instagram, and JioCinema. Well, you are watching India Business Hour. After Britannia, Parle has bit the bullet amid signs of shrinkflation in the FMCG sector. Parle has decided to hike prices by a minimum 5% across the board. Shilpa Ranipeta now joins us with more. Shilpa, the cookie finally crumbling as far as Parle is concerned. What next is due?
Yeah, well, you know, your Parle G, which is the most consumed biscuit in India, is actually set to get dearer. And it's not just biscuits. Rusk, cakes, munchies are all going to get expensive as Parle is rolling out a minimum of a 5% price hike across the board. And this is likely to go up to 10%. Now, when the next time you open your biscuit packet, you may actually find fewer biscuits. And this is a result of shrinkflation, where apart from hiking prices, grammage is also being cut in low unit and entry-level packs of Parle's products. And and this is by about 5 to 10%. In fact, your 5 rupee Parle G biscuit could become as small as what a 2 rupee pack used to be earlier. And this comes close on the heel of Britannia also saying that it hiked prices in the second quarter, and it will hike prices by 4 to 5% in the next 2 quarters. This will be across biscuits, rusk, cake, etc. Now, these price hikes are on the back of rising input costs. Flour, sugar, cocoa, all of these which go into making our biscuits have been getting expensive, and even their packaging costs have risen quite a bit. A larger impact has been due to the hike in import duty on palm oil as recent as September, and that has pushed up its cost overall for these companies by about 45%. Now, the rising input costs are set to eat into our household budgets overall because it's not just biscuits or snacks. Consumer companies across the board are hiking prices. So the next time you go to buy your daily, weekly or monthly essentials, be prepared to pay at least 10% more. Back to you.
Well, in news now from the national capital, high drama at the Parliament's main door today as India bloc MPs came face to face with BJP lawmakers. What followed was a war of words amidst loud sloganeering. Both BJP and opposition have traded charges, accusing each other of disrespecting Bhim Rao Ambedkar, the chairman of the committee that drafted the constitution after India's independence. The opposition has also accused Home Minister Amit Shah of making controversial remarks against Ambedkar. The situation became more tense as MPs started pushing each other. BJP claimed that 2 of their MPs, Pratap Chandra Sarangi and Mukesh Rajput, sustained serious injuries after Congress leader Rahul Gandhi pushed BJP lawmakers. Rahul Gandhi defended himself, saying that a group of BJP MPs were blocking his entry into the parliament and shoving him. However, the BJP has filed a complaint against Rahul Gandhi at the Parliament House police station. BJP MP Anurag Thakur said that a complaint was filed under various sections of the penal code, including attempt to murder.
इतना भी शिष्टाचार नहीं कि कोशिश करे कि उनको जल्द से जल्द मेडिकल हेल्प मिले. मैं समझता हूँ ये इतना घिनौना हरकत है. ग्रीवियसली हर्ट करने की जो उन्होंने कोशिश की है प्रताप सारंगी जी को, जिस प्रकार से धक्का मार के अंदर घुस के सभी को उन्होंने अटैक किया है, उसके लिए उन्होंने सिर्फ माफी नहीं मांगनी चाहिए, उन्होंने पश्चाताप दिखाना चाहिए बजाय के टीवी पे आके सीना जोरी करें.
हम अंबेडकर जी के स्टैचू से सारे एमपी शांति से पार्लियामेंट हाउस जा रहे थे. पार्लियामेंट हाउस के सीढ़ियों पे बीजेपी के एमपी लकड़ियां लिए हमारे सामने खड़े होते हैं, हमें अंदर नहीं जाने देते हैं, और उसके बाद अब ये थोड़ा सा अपना फिर से डिस्ट्रैक्शन करने की कोशिश कर रहे हैं. रियलिटी ये है, इन्होंने अंबेडकर जी का अपमान किया है, उसकी अपॉलॉजी होनी चाहिए और रिजाइन करना चाहिए होम मिनिस्टर को.
Well, from Delhi to Karnataka, now targeted cash benefits for women are reshaping political strategies with direct payouts and increased allocations. State governments are betting big on women as their decisive voting bloc. Shivani Bazaz put a spotlight on how women are becoming the new center of gravity for Indian political parties.
Well, a few years ago, women voters were often overlooked in political campaigns due to their historically lower turnout compared to their male counterparts, despite women constituting nearly half of the electorate. However, this narrative has shifted dramatically with the introduction of targeted welfare schemes. Let's start with Delhi, where the Aam Aadmi Party government has rolled out its Mukhyamantri Mahila Samman Yojana, promising a monthly stipend of 2,100 rupees for women aged 18 and above if they come back to power. Significantly, this amount has been doubled just ahead of the Delhi Assembly elections, marking a clear strategy to consolidate women voters. As of 2023, 14.83 lakh accounts were opened with the total deposits of 8,600 crore rupees in the scheme. But this playbook isn't new. Take Madhya Pradesh, where the BJP's Ladli Behan Yojana has been a game changer with a monthly payout of 1,250 rupees and an increased budget allocation of 18,900 crore for FY 24-25. The scheme proved crucial in securing BJP's recent victory in the state. Out of the total 2.78 crore women voters in the state, 1.29 crore women are direct beneficiaries of this scheme. In Maharashtra, the Mayuti government introduced the Ladki Behan Yojana with 1,500 rupees monthly payout, promising to increase it to 2,100 rupees if they come back to power. The scheme is expected to cost a massive 46,000 crore rupees annually, reflecting just how serious states are about reaching women voters. Among the 4.66 crore women voters in the state, the number of beneficiaries under the scheme stand at 2.34 crore as of December 2024. This trend isn't limited to one or two states. In West Bengal, for example, Mamata Banerjee's Lakshmir Bhandar Yojana offers 1,000 to 1,200 rupees monthly assistance to women, with 14,400 crore allocated for this year. The scheme has registered 2.5 crore women out of the total 3.7 crore women voters in the state. In Odisha, the Subhadra Yojana provides 10,000 rupees annually to women, with a total payout of rupees 50,000 over 5 years, backed by a massive 10,000 crore allocation for FY 24-25. The scheme targets the state's 1.66 crore women voters. While in Karnataka, Congress government is allocating 28,600 crores for the Gruha Lakshmi Yojana, giving 2,000 rupees monthly to women heads of BPL families. The scheme so far has reached 60 lakh beneficiaries out of the total 1.66 crore women voters in the state. These schemes don't just make headlines, they deliver results. A December 2023 SBI research study found that in Madhya Pradesh, a 1% increase in marginalized women beneficiaries of the Ladli Behan Yojana led to a 0.36% rise in electoral success for the incumbent party. The report estimates this impact across 30 to 35 seats in at least 8 districts. And the impact is nationwide. Another SBI study in May 2024 during the Lok Sabha polls revealed that female voters outnumbered males in net incremental share. 93.6 lakh women voters versus 84.7 lakh men. Schemes like Ujjwala Yojana, the Matru Vandana Yojana and the PM Awas Yojana are driving this increased participation, especially in rural areas. From cash transfers to targeted women welfare-centric schemes are now at the heart of electoral strategies. With every state joining the race, it's clear that winning the trust and the votes of women could decide the next big political outcome. Back to you.
Well, with that, it's a wrap on this edition of India Business Hour. Thanks so much for watching. News and updates will continue right here on CNBC TV 18.